The world's biggest banks just surrendered to crypto, and most people still have no idea why. After years of rejection, traditional institutions are now offering loans backed by digital assets. And they're not just experimenting, they're building entire product lines around it. Fidelity, JPMorgan, and Bank of America are all quietly entering the space. And behind the scenes, private clients are already tapping into this system to unlock 6- and 7-figure credit lines using Bitcoin, Ethereum, and even stablecoins as collateral. Crypto-backed loans are no longer niche, but what's driving their sudden mainstream adoption, and why are the world's richest families already using them behind closed doors? They're the foundation of a new financial era. But there's a reason this is happening now, a shift so significant it's rewriting who gets to access capital, how fast they get it, and what they give up to do it. And that shift is accelerating faster than most people realize. So let's break it down. At its core, a crypto-backed loan allows you to access capital without ever selling your digital assets. You deposit your crypto with a trusted custodian. In return, you get fiat, often USD, to use however you want. The amount depends on the asset's value and your loan-to-value ratio, typically between 35% and 70%. You keep ownership of the crypto, you don't trigger a tax event, and you maintain exposure to upside. That means you can fund a business, buy property, or expand a project, all without giving up your position or paying capital gains. It's a tool, but more than that, it's a signal, because it shows that the value system is shifting. In the past, your creditworthiness was determined by a bank's internal rules, your income, your employment, your debt ratios. Now it's shifting toward digital value. If you own productive digital assets, you don't have to prove your worth. Your wallet already does. That's the unlock. We're moving from permission-based finance to collateral-based freedom. And if you've built up a strong portfolio in Bitcoin, Ethereum, or even newer tokenized ecosystems, you now have leverage, not just financially, but structurally. You're no longer waiting for the system to approve you. You're building outside of it. And this isn't just theory. Visa is piloting crypto collateral cards in Latin America. Anchorage and Ledin are offering real-time collateralized loans with institutional custody. In El Salvador, Bitcoin-backed lending is already part of sovereign infrastructure. In the UAE, Ethereum-backed instruments are under active development. This is happening globally, and it's opening doors that were once tightly sealed. The opportunity is real. Buy property without selling your stack, fund ventures without begging VCs, access liquidity without triggering tax events. It's financial agility. And for the first time, it's available to anyone with digital assets and a long-term mindset. But let's go even deeper. When banks start offering these services, they're not just providing access, they're validating the system. They're saying this holds value, this is real, we'll back it. That's a fundamental shift in how the world measures trust. And while some may see banks entering crypto as a threat to decentralization, there's another way to look at it. It's not crypto bending to the system, it's the system bending to crypto. And if you know how to position yourself, that's an advantage, because these tools allow you to move through both worlds. You can use DeFi when you want speed and autonomy. You can use institutional services when you need compliance or scale. You get to choose. And that's what real sovereignty looks like. The more platforms embrace crypto-backed lending, the more competition rises, and that drives better terms. We're already seeing lower interest rates, higher LTV ratios, faster settlement speed, smarter collateral tracking with AI. It's no longer clunky. It's sleek. It's fast. And it's getting better every month. This is what financial evolution looks like. Not a loud revolution, but a quiet redesign of how wealth is accessed and how value is recognized. And here's the emotional spike that's been missing from most conversations about crypto lending. For the first time in history, you don't have to sell your future to fund your present. You don't need to liquidate the assets you believe in just to pay for life now. You don't need to trade vision for stability. You get to keep your asset and use it at the same time. That's new. That's rare. That's power. And once you see it, you can't unsee it. This is not about taking on reckless debt. It's about intelligent leverage, using tools the right way, at the right time, for the right reasons. And with each passing month, the infrastructure improves. Custody gets more secure. Insurance gets more robust. APIs get smarter. On-ramps get faster. What used to require complex paperwork and weeks of delay can now happen in hours. And again, you still own the asset. So whether you're building a business, buying real estate, or simply diversifying risk, you're doing it from a position of strength. That's what this moment is about. Strength, positioning, awareness. Because there's one more truth you need to hear. The people who take advantage of this early will shape the terms for everyone else. They'll own the equity. They'll set the standards. They'll move faster than the institutions that used to gatekeep progress. Crypto-backed loans are not about compliance. They're about capability. And if you know how to navigate them, if you learn the tools, the risks, the mechanics, you become financially dangerous in the best way. This is the real advantage of being early. You don't just see the future. You get to use it before the rules are fully written. So the choice isn't whether banks enter the space. The choice is whether you enter it on your terms. Because right now, crypto isn't just something you hold. It's something you can build with. And that's the shift most people miss. This isn't about Bitcoin versus banks. It's about integration. The winners are the ones who learn how to operate in both worlds. The ones who use their crypto as a bridge, not a boundary. And the ones who see lending not as a burden, but as a launch pad. Crypto-backed loans are that launch pad. And the liftoff is just getting started. And there's something else quietly unfolding as this system scales. As more institutions begin recognizing crypto as a viable form of collateral, the infrastructure surrounding these loans becomes stronger. Custody is more secure. Insurance is evolving. And now on-chain analytics can track your LTV in real time, protecting you before liquidation even happens. This creates a level of transparency and protection that traditional finance rarely offered. And for users who understand both worlds, this moment provides more than just financial flexibility. It provides asymmetric advantage. You're not just accessing liquidity. You're learning how to move capital with intelligence, speed, and strategic timing. Think about what that really means. When you use a crypto-backed loan properly, you retain your upside, avoid a taxable event, and free up capital for smart deployment. That means you can preserve long-term wealth while funding short-term expansion. You can move decisively when opportunities arise and not have to liquidate your future to do it. This is what the next generation of finance looks like. It's the kind of edge that compounds. This isn't just a shift in what assets are worth. It's a shift in who controls capital and how wealth is grown, quietly, strategically, outside the old system's permission. And those who master this early aren't just preserving their future. They're designing it. If this opened your eyes and you're ready to move like the system never wanted you to, subscribe to Wealth Signal. Because while the legacy world hesitates, you're already building what comes next.